I want to quickly talk to you about the top 5 emergency business loans for struggling businesses, same day funding. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about the best emergency business loans for struggling companies with same day funding. Now, before we get into the nitty gritty, let me just tell you right off the bat that there are funding options for COVID 19 relief and other disasters. So, we're not talking about those loans in today's show, but if you want to know, there are three main types of disaster relief loans. You have the SBA Economic Injury Disaster Loan, that's the EIDL, which is reserved for small business owners facing financial hardship due to a disaster. And you have the SBA physical damage loans. So those are reserved for business owners and homeowners, for that matter, whose private property has been physically damaged as a result of a disaster. And these loans have repayment periods of up to 30 years, actually, with interest rates under 4% for businesses that can't get credit elsewhere. And the third category of disaster relief loans are the state and city loans and grants. So depending on where you live, you may be able to tap one of the many states and all local programs designed to help businesses. So many of the COVID related programs have exhausted their funding though, but a new round of federal stimulus could change what's available according to what we've heard from Congress lately. And but in today's show, I want to talk to you about private emergency business loans. And I'm going to give you 4 tips right now to get the right type of emergency loan, for you. Now, some types of loans disperse much faster than others, but that's only one part of the picture. So you want to consider the repayment schedules and whether your business will bounce back quickly enough to service your debt. So you don't want to compound your emergencies, right? That's the last thing you want. So first thing, tip number one, get the right type of business loan. Number two, you want to get an online loan. Those are traditionally cheaper and faster than standard loans that you would get with a traditional bank. So, and they're easy to apply for. So you want to really you want to target those online loans. All the 5 loans we are discussing today are online loans, all right? And you want to avoid scams. Very important. Desperate people make good marks, which is something you don't want to be. So while you may be in a hurry, make sure you're dealing with a reputable lender. So read reviews of the company on sites such as Triple B or other forums on the internet. And you want to look for reviews about the lender's reputation. Very important. And the last tip I want to give you is to please understand the cost of the loan. Loans can be convoluted, they can be complex, they can be complicated, especially since the lending industry is notorious for hiding costs. So remember that you are effectively buying money for more than it's worth. You want to be sure to ask about any fees involved beyond interest. All right. And one thing I also want to tell you here is that you need to get the right emergency loan for your business. There is a constellation of options for getting emergency small business loans. The trick is making sure you get it on the schedule you need at a rate you can afford. This is very critical. I'm going to repeat it. The trick here is to make sure you get the loan on the schedule you need at the rate you can afford. So I'm showing you right now 2 tables. I'm going to show you the first table here that kind of tells you the loan type. So you have loan type, what is it, and the typical time to funding. So you have short-term business loans, and the funding is 2 to 5 days. Then you have online lines of credit. The funding is 2 to 7 days, depending on the lender, and 1 to 2 days for funds when the credit line is secured. Secured credit lines and secure loans are faster to disburse anyway. So you have invoice financing. So financing in which the business's unpaid invoices are leveraged to access business funds. And funding here happens within 2 to 5 days. And then you have the second table that I'm showing you right now. You have Other categories of loans, you have bridge loans, and this is a fast business loan used to fulfill funding needs until slower financing comes in. And you typically get it within 7 days. And the traditional installment loans, those that we're all accustomed to, right? And those take longer to disperse. So you're looking at 1 to 3 weeks. And of course, you have business credit cards. And the last but not the least, the SBA disaster loans that I just spoke to you earlier about. The bottom line here is that you want to get the right emergency loan for your business. You want to exhaust all the possibilities and all the options that are applicable to your business in the location where you operate. Very important. Before we get into the actual ranking, please check out this short video about our evaluation approach. We do have a methodical approach when it comes to categorizing, reviewing, and listing business loans and personal loans on this show. Check this out. All right, number 5, let's talk about the top 5 emergency business loans for struggling businesses. Number 5, P2BI. This is P2B Investor. Our score 8.5 over 10. What are the pros and cons here? Now, let me just say that this company is great for asset-backed lending. If you're looking for an asset-backed line of credit or loan, you want to go to P2B Investor. The pros and cons: no credit score requirements, high borrowing amounts, rates tend to be cheap, so the rates tends to be inexpensive, and the application process is fast and easy. Very important to remember. The cons: it's only available to B2B businesses, is not available to businesses in some industries, including construction, real estate, medical insurance billing, and cannabis. And some additional fees are charged and collateral is required. All right, and so P2B Investor, known as a P2BI for short, is a P2P, is a peer-to-peer lender that offers asset-backed lines of credit to qualified B2B businesses. So the company was founded a couple of years ago in 2012, and they opened their doors to customers in 2014. And the cool thing here is that they do have a variety of loan options that we love, and it's same-day funding. And basically, you can borrow up to $10 million, and you have the interest rate is in the high teens. You have origination cost 1.5%, and for this, you need to have some collateral. And in terms of the application process, you need to provide everything, including the balance sheet, the income statement, the accounts receivable agent reports, the accounts payable agent report, and you also want to make sure that you are able to have everything to them as soon as possible. One thing they're asking when it comes to the financials is that, first of all, the business must be the company must be in business, must be operating at least 1 year. Very important for them, and they want the financials to be year to date and for the last 3 to 5 years. So you want to provide as historical context as possible to allow the underwriter to basically approve the loan. And they have excellent customer service and technical support, so you can actually reach out to them via phone or email. And what we love is the fact that they will actually approve you as soon as possible, as soon as you send them all the information they need. One thing we want to say here is that, according to our research, we've seen that P2BI has difficult to meet borrower qualifications. In other words, the company must be making at least $500,000 in annual revenue and have approved assets that can be used for collateral. All right, remember, we're talking here about an asset-based lender, so the collateral must be good quality, quote unquote, good quality. Number 4, we have Riviera Finance. Our score 9 over 10. This is best for funding unpaid invoices. So we're talking here about a lender that specializes in invoice factoring or invoice financing, right? So one particularly frustrating scenario in an emergency is when you have no money, you have money due to come in, but your invoices haven't been paid yet. So it turns out that you can get an advance on those invoices through invoice factoring. So essentially what happens is that you are selling your unpaid invoices to a factoring company at a small discount. So a discount means you're probably getting $98 out of every $100. So if you are in a hurry, one of the best companies to do this with is Riviera Finance, and they can buy up to $2 million of your unpaid invoices, paying 95% of the value up front. So the discount here is 5 points. So Riviera Finance then goes to work on trying to collect on the invoices. Discount rates, so the amount Riviera Finance keeps from every settled invoice, starts at 2%, and Riviera Finance is a non-recourse factoring company. So what are the pros and cons here? Pros: it's suited for startups and small businesses, no credit score requirements, competitive terms and fees, no monthly minimums, and there is an easy application process. It is not suited for B2C businesses. So that those are the cons. All right. And one thing I want to say here is that now Riviera Finance has been in the business for nearly 40 years. They've been serving mostly B2B and B2G, so business to government industries, since 1969. And right now they serve more than 1,500 clients, and they manage over 20,000 customer accounts each month. Think about that. That's fantastic. So here, let me give you a little bit of background about their application process. So the credit facility size $5 to $2 million, $5 to $2 million. The advance rate up to 95%. Discount rate typically start at 2%. Maximum overdue account 60 days, and a possible early termination fee. There is a fee for that, and the contract length usually 6 months. And of course, it's a non-recourse process. So the thing here is that non-recourse means that basically you will not have to repurchase the invoice if your customer goes bankrupt. So you will have to repurchase the invoice in some cases. However, depending upon the process, but yeah, generally it's a non-recourse company. So this is a great company for an emergency business loan for a struggling business with same-day funding. If the company is willing to sell its accounts receivable upfront. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. I'm still having a convo with you about the top 5 emergency business loans for struggling businesses. And today I want to talk to you about number 3. We have Lendio. Our score, 9.9 over 10. 9 over 10. This is best for an emergency business term loan. You get the same day funding here, and getting a more traditional term loan during an emergency can be tricky. We all know that, because those traditional bank loans usually have slower application vetting processes, right? So one way to maximize your chances of getting the loan you need quickly is to use an aggregator service such as Lendio. So Lendio is not a direct lender. They are a platform that matches borrowers with multiple lenders, all right? So they don't originate their own loan. Instead, they pass your application through its networks of lenders to find a fit. So Lendio's borrowing qualifications are easy to meet. You just need to have been in business for at least 6 months, have a credit score of 550, a monthly revenue of at least $10,000, and Lendio does not charge borrowers for using its service. So you're looking at, on average, a day or two to get your money through Lendio. In some cases, some customers have reported getting their loan the same day, like within 12 hours. All right, so this is very important. And so what are the pros and cons? Borrower qualifications are lower than what banks have, multiple types of financing available, high borrowing amounts, long-term financing options available. Applicants can quickly be pre-qualified. The application process is fast and easy. Customer service is helpful. The cons: rates can be expensive and funds can take a while to disperse depending upon the amount you're looking for and the situation of your own company. All right, so the Lendio offers the following services. So besides emergency business loans, they also offer short-term loans, term loans, merchant cash advances, lines of credit, SBA loans, and equipment financing. Okay, and in terms of loan terms will vary depending upon the partner funder you're working with. So those charges may include the interest, fixed fee, origination and administration fees, prepayment penalties, and other fees. Number two, we have Fund Bucks. Our score 9.5 over 10. This is great. This is the best for a same day business funding. And the thing here is that while many online lenders are fast, far fewer can get you your money on the same day you apply. And Fundbucks is one of the lenders that can pull it. They can pull it off. Basically, in our research, we've seen that they can actually lend you the money within 6 hours. Within 6 hours, think about it. So, though not the cheapest option, though, Fundbucks is willing to work with most borrowers. So you only need to have a credit score of at least 500. So the quick and easy application process is done by linking your accounting or invoicing software. So Fundbucks then uses your activity on that software to evaluate your account. So you can borrow up to 100,000 through Fundbucks with term lengths of 12 weeks or 24 weeks, and flat rates start at 4.66%. What are the pros and cons here? Pros: borrower qualifications lower than with banks. The application process is fast and easy. Low credit score requirements, and you have multiple avenues of customer support. What are the cons? Rates can be expensive, and repayments are required frequently. And Fundbucks borrower requirements. So they don't have specific requirements regarding your time in business. Borrowers must have a personal credit score of 500 or above to qualify for funding. You must be based in the United States or one of these U.S. territories. So we have Guam, American Samoa, Northern Mariana Islands, Puerto Rico, or the U.S. Virgin Islands. And Fundbucks also requires that you must have been using a compatible accounting or invoicing software for at least 2 months before applying, or have 3 months of transactions in a business bank account. So here is a list of the compatible software that you need to have, the software compatible with Fundbucks. So we have a Clio. We're going to put the list on the screen here. You have Clio, you have Ability, FreshBooks Classic, FreshBooks New, Harvest, Invoice ASAP, Jobber, Cashew, QuickBooks Desktop, QuickBooks Online, Sage One, Zero, and Zoho. Right, so this is pretty cool to know. And one thing I also want to say here is that you basically, if you want to go with Fundbucks, know you will get the money the same day. However, it could be expensive. It could be expensive, and this is just the name of the game. If you're comfortable with that, that's fine. Flat rates, as I said earlier, starts at 4.66%. Number one, folks, number one, when it comes to the best emergency business loan for struggling companies, number one, On Deck. Our score 10 over 10. This is best for an emergency business line of credit. Now, they have been also offering lately loans, emergency loans, and emergency asset-backed loans. And On Deck offers both fixed-term business loans and business line of credits. So while On Deck is not the cheapest way to get a line of credit or a loan, its fast application process and relatively low borrower requirements make On Deck a solid option to fall back on. And here, credit limits range from $6,000 to $100,000 with repayment terms of 6 months with no draw fees. And you'll have a slightly less punishing repayment schedule than you would with most short-term loans with weekly rather than daily payments. Okay? And one thing I want to say here is that what are the pros and cons here? So pros, borrower qualifications are lower than with banks. You have multiple types of financing available. Lower cost for repeat customers. The application process is fast and easy. Funds are dispersed quickly, and the kind of loans that On Deck gives you can enable you to build business credit. And what are the cons? Financing is not available in some states, is not available to businesses in some industries, and rates can be expensive. And talking about rates, let's just talk about the short-term loans of On Deck here. So the borrowing amount ranges from 5,000 to 250,000. The term lengths you're looking at 3 to 18 months. The fixed fee 0.4% to 0.42% of the borrowing amounts per month, and the origination fee 0 to 5%, and the effective APR, the annual percentage rate, as low as 11.89%. The average, according to our research, the average is kind of high. It's around 40%. All right. So this is very important. Now, in terms of collateral, they have UCC1 blanket lien, personal guarantee in some cases. One thing I want to say here is that overall here, OnDeck does not charge interest on its emergency business loans. Instead, your repayment amount is a fixed rate, also called the total interest percentage. So the amount you have to repay is only calculated once. Fixed rates don't compound like interest. For example, if you have a fixed rate of 19% of the borrowing amount and you are borrowing $50,000, you'll have to repay $59,500 total. In other words, you multiply 50,000 times 1.19, that's equal 59,500. And the OnDeck's rates range from about 0.4% to 0.42% of the borrowing amount per month. All right, and we've seen instances where that amount, those interest rates, went from 0.5%, 0.4% to 0.5%, or even 0.6% in some cases. All right, I'll be right back right after this. Don't go anywhere. All right, folks, thank you so much. We're about to end today's conversation, and I want to quickly recap here. So, in summary of the best emergency loans for small businesses, number one, you have OnDeck, our score 10 over 10. This is best for an emergency business line of credit or business emergency loan. Number two, we have Fundbox, our score 9.5 over 10. This is best for same day business funding. Number three, Lendio, 9 over 10. This is our score. This is best for an emergency business term loan. Number four, Riviera Finance, our score 9 over 10. This is best for unpaid invoices. And number five, we have P2B Investor. This is best for asset-backed lending or asset-based lending. One thing I want to say is that all these 5 loans offer same-day funding. And it depends upon your company, it depends upon the situation, but you have to request it during the application process. All right. Thank you so much, folks, for today's conversation, for your attention. Really appreciate it. I will see you next time. But until then, remember, stay marvelous.